Hello everyone and welcome back to another episode of the VMC Inc. Financial News Network. We are just at the end of the second quarter of 2016, and it's a good idea to check in on our portfolio. Now you may have heard that there's been a lot of volatility with Brexit. Let's see how it affected our portfolios. We'll start off with our tech stocks portfolio. Let's check what did it look like before the end of this quarter. If we back up to the beginning of the year, getting down to it, we had a 0.95 increase in the value of our holdings. That was at the beginning of 2016. If we look at the number right here, well, 2 quarters into the year, we have a decrease in 11.94% since first purchase, which is about $47.27. So our tech stock portfolio is not doing very well. Let's see what's weighing us down. If I change the order like this, we'll see that the biggest loss comes from GoPro, 42% loss of value from the beginning of the year. Then we've got Angie's List, Square. That one, if we look back on our last recaps, Square at the beginning of the year had a loss of 6.96%, and at the end of the first quarter 2016 had actually a gain of 25%. The tide has turned, Square has lost 25%. Twitter's down 25%, Netflix is down 16%, Apple is down 9% from the beginning of the year. At the end of the first quarter, Apple was actually up 3.46%. Even Microsoft has lost 6.64% of its value at the end of the second quarter. On the positive side, Nintendo has gained 3.07%, Activision has gained 5.37%, and Etsy has continued its possible turnaround at 16.38%. Going back to the beginning of the year, Etsy had a loss of 72%. At the end of the first quarter, Etsy had gained back 5.58%, and now it's up to 16.38%. So overall, our tech stock portfolio is not faring very well. Now let's turn our attention over to our 401k portfolio. We have these 3 funds, one focusing on bonds and 2 focusing on stocks. One is international stocks, one is domestic US stocks. So for some perspective, our bonds portfolio was down 2.67%. Half a year later, it's up 4.04%. Bonds are always safe when stocks are difficult. Our US stocks at the beginning of 2016 had gained 0.28%, and now they've gained 1.30% halfway through the year. At the beginning of 2016, our developed markets stocks had lost 0.42%, and they have continued their slide, most likely because of Brexit. Our international stocks have decreased 5.24% in our 401k. Well, in total, it has been a 0.64% increase in the value of our 401k, however. Looking back at the beginning of the year, it was a loss of about 0.25%. At the end of the first quarter 2016, that was an increase of 0.44%, and it has been recovering 0.64%. So in general, our domestic stocks and bonds are doing well, especially bonds, and our international stocks have not. Lastly, let's look at our ETFs portfolio. So we have these 4 ETFs, and so if we compare with the beginning of 2016, the aggregate was that we had a loss of 3.52% value at the beginning of the year, which was just about $11.17. 1 quarter into the year, things had started to rebound. So we had a 2.70% increase. And now half a year later, halfway into 2016, the picture is even better. We've got a 4.87% increase in the value of this portfolio. So seeing the details, BND, our bond ETF, has increased from $80.75 per share to $84.30, an increase of 4.40%. Our total world stock, VT, has increased from $56.65 to $58.07, a 2.51% increase. Our total US stock ETF has increased from $102.74 up to $107.16, an increase of 4.30%. And finally, our high dividend yield ETF, VYM, has increased from $65.95 to a whopping $71.46, which is 8.35% increase. In total then, having 1 share in each of these ETFs since the beginning of 2016 has resulted in a cool $14.90, or 4.87%. So we can see that our ETFs portfolio has been the big winner, and our tech stocks portfolio has been the big loser. It should be pretty obvious then. Invest in ETFs. So how will the global markets continue to react to Brexit? We don't know. So let's check back in on the 3rd quarter of 2016 and see how it's going. This has been Victor Campos for the VMC Inc. Financial News Network. See you next time.